Welcome back to another episode of Key Factors Podcast. I'm your host, Mark Jones, and we are currently sponsored by ReviewMyMortgage.com, which is the largest index of mortgage programs in the nation. And the last 3 episodes have been pretty good. We've had a lot of insight about what's going on in our market. We've had some top producers. We've had some top brokers, but all from the realtor side. And today, I want to be joined by some of my friends. Today, we're lenders only, Lender Life, and I'm going to introduce my guests real quick, and then I'll give them a moment to kind of tell who they are, how they got to be, and where they're headed. So first guest I have is Chris Cano. Chris,
what up?
How you doing, brother?
Bro, you threw me off, man. We were friends. You know, going back, I was doing a VA boot camp for realtors, and to get information for it, I went into Shift Talk, and I put in the search bar VA, and I saw all these posts I've made over the years. And there's some where Mark and Cano are side by side fighting the good fight. And there's some where we're going to war. And it's funny because, you know, dude, where you and I started to where we're at today is
crazy, right?
I love it.
Same here.
I love it, man.
Well,
but it's always for the betterment of the audience. You know, everybody always either gets a show, but they always learn something.
Yes.
Watching you and I go and debate something, people are always going to learn.
Absolutely.
Yeah.
I think it has a lot to do with respect. I respect
Amen.
you, Chris.
I respect you as well,
I respect
bro.
how long you've been in the industry, how much
Yeah.
you know, how many people you've helped, and still are helping, not
Thank
only
you.
from a customer standpoint, but from a leader, mentor, many different facets.
Right.
I'm one that believes that conflict is not a bad thing.
I love
unless
conflict.
it's unresolved.
Yeah.
So the goal here is if we have any kind of conflicts, we resolve them before we leave the room.
Yeah. I'm glad to be here.
No.
You guys wanna be alone for a moment?
And then
You're going to have us gang up on you. You got to be careful. Yeah.
I'm just asking.
So that brings me to my second guest, which is Stephanie Peavy with Guaranteed Rate. How are you?
Mike. I'm good. Thank you so much for inviting me.
Absolutely.
Yeah, this is so fun. You know, I always had a vision of like lenders coming together. And like I told you earlier, I came from Alaska. So there wasn't really a lot of lenders that wanted to sit at a table with each other for whatever reason. But I love this forum. I love being surrounded by people that are smarter than me. Maybe.
Oh, maybe.
I was going to say maybe.
Maybe. Yeah, depends.
That's why we had you here, ma'am.
Yeah. Help us.
I'm the comic relief. What is going
Yeah.
on?
So real quick, if you guys could just tell us where you work, your story in the mortgage business. We're not pressed on time or anything like that, but I want the audience, the folks listening, to truly get a perspective of who you are and who they're listening to.
Yeah.
Why? Because I only bring experts on this show, and we kind of no filter this thing.
Yeah.
So Stephanie, you want to start?
Sure, I'll start.
Go ahead.
So I'm Stephanie Peavy. I'm with Guaranteed Rate Mortgage. I'm a branch manager with them now. I've been back in San Antonio for about a little bit over a year. And I got into this industry in 2009. And by accident, actually, I'm originally from San Antonio and was working for a builder. And then moved to Fort Hood, and the builder that I worked for, D.R. Horton, wasn't hiring. I was a closing coordinator for them, and so I kind of had to start over. I started with DHI Mortgage and started off as a receptionist, and just kind of fell in love with the whole thing. And you know, my husband's in the military; he's been in the Army for 16 years, and so I started to kind of dig into VA and things like that. And I, again, just a receptionist, training as a processor, and I think fate sort of plummeted me forward into kind of working with VAs because I bought a house and I worked for the company I bought a house for, and it was the worst experience ever. I couldn't touch the loan. You know, I kept getting asked for documents over and over, and that just sort of was my trajectory to move forward and either complain about it or do something about it. And I decided to step out from an operations manager standpoint and just kind of start off as an originator.
Throw your hat in the ring.
I'm
Yeah.
like, wow, I can't complain about it if I'm not going to try to inflict change on it. So I did that. It was really scary to go from, you know, making a salary to just being completely commissioned.
Oh yeah.
In Alaska, where I didn't really know a lot of people. So
But you were getting that oil money though, weren't you?
it's not that much. People
It's not
think
that. How much is
not
that?
that much. It varies. So it could be like $1,000 a year, but it's per family, per household. So that doesn't really do much. But yeah, so, you know, and I sort of just kept getting moved forward. And here I am today back in my hometown of San Antonio, Texas. And, you know, my whole family's military but me. I was actually going to join the Navy. So thank you for your service,
yeah.
Chris, and telling me that you were in
Thank
the
you for
Navy,
that.
that I was going to do that. But I didn't end up doing it, but my daughter's Air Force, husband, 16-year veteran. My brother's a Purple Heart veteran.
Let's go.
Disabled veteran. So, helping people is where my heart is, but helping my military family, that's where I resonate.
So you're now currently a branch manager. Is that correct?
That's correct. Yeah.
So how did you transition from loan officer to branch manager?
So by not by request.
Okay.
It was just kind of sort of, I was doing more and being out there. And again, like I said, my experience was so bad that I made it a point. Like a lot of people, I think, make the mistake of coming into this industry and wanting to chase the money because they kind of see all the glamour and stuff like that. And they don't understand what happens behind the scenes. So at my office, I was the one that was literally spending the night there, literally, digging in and trying to make things work when everybody else was giving up on it. And it just sort of handed to me.
Yeah. Okay.
And, a lot of work, a lot of time,
less
pay,
That's for
and,
sure.
a lot of time taken away from my family. That's for sure. And so, yeah, it was nice to be able to give back to them for them being so supportive all these years.
Good deal. Okay, so now we know who Stephanie is, what she's about.
That's right.
Yeah.
How about Mr. Chris Cano?
Yeah.
Who are you, dude?
Dude, I have a question.
Bring
Are
it.
we
Yeah.
able to say yet that branch manager is the worst position in the mortgage industry yet? Is that a popular or unpopular opinion?
I would say it is a tough position.
It's
because
tough.
You, for the most part, and you guys can both correct me if I'm wrong.
Come on, let's get it.
And matter of fact, I wrote this down.
Let's talk.
As you were talking. It is the least glamorous position.
Yep.
The least paid position.
True.
Depending on the type of branch manager role that you have, whether you're a P&L branch or a corporate branch or what have you, it can have its upsides, but for the most part, there is no 40-hour-a-week work week. There is no, I'm going to turn my phone off and just relax. I mean, honestly, during Thanksgiving, that is the time every year where I get to unplug, and I know it's okay because everybody else is unplugged at the same time.
I think in theory it's meant to be the best position. I think hearing when Mark asked you how you transitioned, I started to reflect on how I transitioned. If I even transitioned, I don't even know like when you are deemed to be a branch manager.
Right.
Who gets to call you a branch manager? Is that the title? Is that your people? What happens if your people aren't profitable under your regime? Are you still a branch manager? But I think about how often we go back to, man, if I could just bootstrap it again, do this with a team of 3 people instead of 360 or 30 or 10 or however big your branch is. You got to get it dialed in if you want to be.
It can definitely be done with 3 people. I think when I left Alaska, I had 3 loan officers and myself, and we did $110 million in a state with only 700,000 people.
Okay.
Right? So
I didn't know we were flexing numbers.
I mean,
we're getting into the numbers.
Pop my collar.
You want to bring
You said it. I'm just trying to retort.
Hey, Stephanie, hit me with that average loan amount up there in Alaska.
Let's go. Call it.
Is that
do the math.
Is that important? Do we need to go like details? Like, stop talking about me.
So before we go further on this, Chris, tell us who you are, what you're about, because I want to continue this conversation.
Yeah, this is good. So Chris Cano, I'm with Rev Mortgage right now. Have the privilege of tag teaming this with Cody Cotasquillo. We're 50% partners in it. Prior Navy. So thank you for your gratitude, by the way. I didn't acknowledge that, but appreciate it. So from San Antonio, joined the Navy at 18. In 01, went to 2011, served on fast attacks as a nuke engineer. So really resourceful in understanding guidelines. No sailor understands nuclear power. That's a fact. Like, we're starting up reactors. But one thing they teach you is they teach you how to go find the tech manuals you need to actually do it. So I've always loved guidelines. I've always loved tech manuals. Naturally, mortgages were an easy fit for me. Yep. Started off in Hawaii, kind of made a little bit of a name for myself. Went on to, I started with Veterans United, Hawaii, started Veterans United San Diego, and then, was able to come into San Antonio in 2016 and start Veterans United San Antonio. Discovered that we didn't want to be a big part of a big box company. We were a lot of overlays. We said we help a lot of veterans, and I'm not going to get into Veterans United right now, but decided to start our own journey. Me and a business partner started a thing called Aligned. We're going crazy in the COVID boom, thinking we were scaling. We weren't really scaling. We were just growing. A lot of debt. And so then a year ago, branched off from them, started Rev Mortgage. Cody and I have been doing it since. 1 year in, operation, get in the black by any means necessary. Bootstrapping it, to the 10th degree. Like I said, I just got out of a VA boot camp for realtors, and I hadn't done a VA seminar in a long time, so to brush it off, go through the guidelines again, make sure I was up to date on my circulars. And it was fun. It's exciting. But yeah, that's where I'm at now.
Good deal. So back to this topic that was brought up, and great freaking topic because there's so much we can discuss in this.
Yeah.
But the first thing that I want to bring to light is recently we have seen an uproar in the recruiting aspect of the way recruits go about things. They used to come with sign-on bonus. They used to come with benefits and what we have, et cetera. And now they're skipping all that and just saying, hey, would you like your own branch?
Yeah.
What's going on with that? What are your thoughts on that? Because for me, I feel kind of like what you were saying earlier is at what point did I believe that I was able to open my own branch, responsible enough, had enough volume, etc.
I don't think you can ever get ready. I mean, you guys correct me if I'm wrong, but I think that the thing that we have to point out is there's a distinct difference between branch managers, right? So yes, that's a title, but there's a type of branch manager that simply is a resource. People come to us, they ask us questions, we answer questions, and that's our job, just kind of sitting there. And that's not the type of branch manager I want to be, or a person in the industry. I want to share my vision, and I want to join that space with people that share that vision with me, want to inflict change.
Are you paid by profitability of your branch?
Yeah.
Okay. So you are incentivized for people to win, and I think that's the only real way to make it work is, I think a lot of branch managers want to get paid regardless. And it's tough because if you're not a true P&L branch manager,
you don't understand.
Yeah, no. And with a P&L model, sometimes we don't make money, even if we're producing, because we have to cover the cost of the branch.
I mean, that's how my branch is set up.
Like everything. So yes, we're incentivized. But, when we have a team, say, for instance, that we inherit, that's not doing a lot of production, that falls on us unnecessarily. And
you don't get to pick who joins your team. Like you do.
Yeah.
Okay.
But I inherited a team when I got to Guaranteed.
Gotcha. Gotcha. Okay, cool. So what your break even is, what number you need to hit. What happens if you don't hit your break even?
I mean, you don't make any money.
Do you lose though?
No.
Well, that's nice.
That is nice.
That's a good thing.
Yeah, that is nice.
I mean, lose is also a loose term. Like, yes, I don't lose money, but I lose. Who wants to not be profitable?
Sure.
I mean, and it's getting harder in this industry too, right?
Yeah.
So
yes, but I also think it's all a concept of understanding this industry that we're in, what time we're in this industry, and for example, if you're running a consistently negative P&L that is damn near hitting the black, you're close every month, I don't know any mortgage company in America that would let you go at this point.
Yeah.
Simply because we're talking there are branches that are bleeding $100,000 holes every month and still haven't made decisions to lower their fixed expenses, their overhead, their operations, their marketing expense budgets, et cetera, et cetera. And I think there's going to be a tipping point that we're going to see a lot of them fall out here in the next couple of months.
Sure.
I would imagine. I mean, what are you guys' thoughts on that?
I think that's true. And I think it's also important that companies, from an operations background, I know how important operations is, and we're only as strong as our team. And so if companies continue to do things like just market the company and not provide the resources that are needed for me to be able to keep my word to the clients that I'm working with, then it's going to be really difficult to keep us profitable. And so
you are still producing, correct?
I am, yes.
Okay, so I'm jumping back. I jumped back in, and I'm full-fledged producing as well. And it's one of those things that I've had many conversations with the past. I guess 4 episodes to where we're all top producers. We're all rolling our sleeves up and getting our asses back in there because that's what's necessary at the moment.
Right.
There's so much money to be made. I look at a lot of like retail branches or even like enterprise, and at the end of the day, whether it's Man Mortgage, Rev operating under AMCAP, or even Guaranteed Rate, right? Everything rolls up to the top. Yeah. And so having full transparency in regards to, what your account execs, are saying are built into your pricing, but, they're making money on admin fees, processing underwriting. There's so much money to be made. And then you also don't know how much do they want to make on the back end. On their hedge, is it 50 basis points? And then in between pricing, there's nickels and dimes, associated. And so, there were times when we were Veterans United where we were having a negative 40K a month, and specifically San Diego, it had a lot of swings in it. And, but when Veterans United San Diego would lose 40,000, but a lot of that rolls up. It wasn't a true negative 40 to the company.
For the company,
they were still either making money, but also the fact that they had an office in San Diego was a marketing platform for the national brand, so they would write it off as a marketing expense because although the branch loses a negative 40, we're out in the streets, we're wearing our Veterans United t-shirts, people are seeing us calling 1-800 number ending up with Veterans United in Missouri, where maybe the prices were a little bit higher, so they would recoup that. And unless you have full transparency in regards to what the true loss is, you'll never have it. But all you can do is comply with the agreement that's at the table.
That's right. And this is the same issue that I had with previously Academy Mortgage, because they had branches that were corporate model and also P&L model.
Right.
I was a P&L model.
Okay.
So when the P&L folks got together to make a decision, it wasn't being heard because they were different intentions of the corporate model and the losses and how to move that around.
Right.
Yeah, because when them being slow to get rid of like that negative P&L is because it's not truly negative,
Right.
It's negative based on the agreement that y'all have, but it's probably not negative. I mean, nobody's really going to take money out of their pockets and cover your losses unless you got a ton of capital and you're holding your breath. But yeah.
And I think that's why we're truly not paid on the bottom line the way it would if you were the owner of the business.
Right.
Yeah.
Even I have a DBA. Same concept. I mean, if I was paid just on the bottom line itself, I don't think it would work properly. In addition to it'd probably be violation of something somewhere. But okay.
Are you W-2'd?
I am W-2'd. Yep.
Okay.
Still.
Yeah.
Yep.
Are you W-2'd?
Yes.
Okay. Yeah. Me too.
Yeah. Nice.
So even like, you could build a reserve and et cetera, but, at the end of the day, they could come and fire you at any moment.
Absolutely.
So I mean, branch manager or not, we're employees to some capacity until you, of course, have your own capital to
That's correct.
Yeah.
That is correct.
So we all should get on the ball, get our own capital, and then what I mean?
I'm gonna ride this one out.
Yeah.
Just hold off on that for a minute.
You got this one? I'll get the next one.
It's a little bit more capital.
Let me get
than
my
you would
purse.
imagine.
Hold on.
Because the way that's set up, and I don't know if you've privy to this, is the actual lender, let's say Man Mortgage, let's say AMCAP in his case, guaranteed rate. They have to keep X amount of dollars on reserve with each of those investors in those warehouse lines for everything to keep going. And they have to continue to comply with these things, or else they have overlays put on them.
Right.
And next step is that investor goes away.
Right.
And that's where you're seeing a lot of folks marketing, I can do below 620. Oh, no, I can't. Oh, it's back. Like it's always been there. Your company just didn't have enough reserves liquid with this company to be able to continue to offer that for them to buy that loan off the market, secondary market.
Yeah.
A lot of people don't know that. So,
a shit ton of people don't know that.
So people always wonder,
Ask
where
a
does
loan
it all
officer.
come from?
Yeah,
Exactly.
So, and that's okay. We don't necessarily want them not to not know that, but I don't want you worrying about that as a loan officer. That's what bite that I bit off to chew, if that makes sense. So
the crazy thing is like, running a branch at a deficit is if you're not getting a talking to from somebody and they're just letting it ride, you start to get a little bit suspicious in regards to what they may be doing with your tranches, right? So like you're all of a sudden your rates are up 10 basis points. Would you really actually feel that? Do you know if your tranches have been messed with? So we would run a lot of side-by-side models and always, in this industry, we're friends with people who work in different places, for a reason. Like, hey, man, what's your pricing doing today? You know, because I've been trailing you at like 20 bips and all of a sudden you're 30 bips ahead. And I need to know if the guys on the back end are trying to recoup this 40K that I lost of theirs through my pricing or not, and when you start playing that game and transparency's out the window and trust is out the window and you don't know what they're putting in the back end, it becomes a big distraction. Smoke and mirror.
Absolutely.
Yeah, but nobody's going to lose money without working to hedge it at some capacity.
Oh, right.
So,
yeah.
That is correct.
It's fun.
So good discussion there. And I don't even know if I got the question answered. What are your thoughts about people recruiting your loan officers if they haven't yet for their own branches?
Recruiting out of our office. Listen, it's sort of like a relationship, right? Like if he's gonna cheat, he's gonna cheat. What am I gonna do? If I can't make someone happy,
why is it a he
or she or she, whatever.
Okay. Yeah, it's mostly dudes. It's okay.
Whatever.
Lorena Bobbitt just jumped on the
I
mic.
said he because I'm a female and I got a he.
Okay.
But anyway, if they're going to go somewhere and I don't make them happy, then why would I don't want them there if they don't want to be there. Again, just like you said, I would rather have a small team of people that are going to do the right thing, are going to go out and have the same vision that I do, than have, a team of 20 people, half of who don't want to be there.
That's a good point. And I do think that is what's happening right now in regards to individual branches. We're seeing them shrink and get stronger within a smaller pods.
Yeah.
We're doing it here. I don't have as many loan officers as I did, but it's also not as much time out of my day chasing down. I mean, it's like herding cats instead of cattle.
Absolutely. And I think maybe it was important, as hurtful as it is, maybe it's important that this happened because it sort of weeds out the people who got in it for the money, right? Yeah. 2020, everyone wanted to be a loan officer or a realtor or whatever, or 20. And now they know that it's not just given to us. It's not handed to us, right? We got to go out and work for it. We got to build relationships. We got to maintain relationships. There's work.
That is a great transition.
Yeah.
So the past 2 episodes that we've discussed on here have been regarding the attack that realtors are facing. And I do think to a certain extent that they are under attack. They're under a microscope, that's for sure. Especially their commissions, how they get paid, what their value is, what they're actually offering. Are they offering it the right way to consumers, both from the listing and the buying side? We saw the largest lawsuit come down with a verdict in favor of the prosecution. And now we're seeing the buyers wanting to jump in to get their piece of that pie as well. What are y'all's thoughts on that? I mean, of course, it's I think as we progress in time, technology progresses, the value that we as professionals adding to the consumer is going to continue to be questioned when things that they are normally not privy to now become available on their cell phone. Does that make sense?
Tons of sense. So you've been discussing this over the last couple episodes?
Oh, yeah.
What's
juicy
been, without getting and I'll go back and watch, but what has been the consensus of those episodes? Like, so where do y'all stand on that?
The most recent one, well, I mean, they were all insightful, and I played devil's advocate a lot within these because I'm not a realtor. My wife is a realtor.
Yeah.
But they have to be honest, I've had top producers. So at the end of the day, they were able to give their insight. They were able to give what they recommend, what they think is best, but they also have the understanding that it's not going to affect me because I'm going.
Okay.
Right.
That's where I'm at with it. And I didn't want to come off insensitive. But,
not at all.
I don't give it, at the end of the day, one, it's a realtor problem in theory.
Yeah.
Us lenders, we've had our ebbs and flows, and there's been conversations on the lending side about maximizing how much. We've worked at companies that have capped. There are always certain things that change our pay.
Right.
Salespeople know how to get paid, period.
Yeah, you work the comp plan.
You figure it out. I see real estate agents already hedging. They're getting involved in title. They're getting involved in other things. A lot of real estate agents were hedging, getting into the mortgage space. We're seeing more flexibility with realtors being able to carry their mortgage licenses, still operate. So I think the most important thing is to understand, what is the requirement as, whether you're head of the household or you're a contributing member in your family as a financial partner, what do you need to make and how you're going to do it? This is a component that could threaten that, but only threaten that one specific thing where then you got to figure something else out.
Right. Yeah.
I think that this has been coming for a while.
Same.
I think, we've had it good for so long. It was only a matter of time before this starts getting regulated, talked about. And so I think anybody that's really, thrown off or caught by surprise, you've just been missing, what's been coming. I know that sounds insensitive, but
it really doesn't. Yeah, I don't think it does sound insensitive. I think it sounds very as a matter of fact.
Yeah.
And I also believe that you are correct. We've kind of seen this coming, which is why, in my opinion, years ago, my business model was go after the consumer, not necessarily the realtor.
Yeah.
Educate that consumer, give them transparency, focus on them to have a great experience. And I say it a lot, but there's plenty of deals that the lender is holding together most of the time.
Yeah.
And I think for many, many years, many, years, realtors have been paid pretty damn good.
Yeah.
I'm not saying that I want to take money away from them, anything like that. I'm just stating the obvious. 3% in any way, shape, or form of the rising value prices that we're dealing with is pretty good living.
Yeah.
On our side of the tracks, which we can talk to that, our pay was cut many years before I even got into this business. Our pay was cut. And from their aspect, their pay was created or decided upon back when they were, and I've said this before, were going to the listing agent, negotiating in person, getting the contract signed, faxing over back and forth, et cetera, et cetera. Now it's just not the case. I mean, there's just so much ease of access and all that.
The hardest thing to compare apples to apples is I was having this conversation with a real estate friend of mine defending him against us. In theory, the amount of money we are making is stupid money. Mm-hmm. Like when you look at a tip, total interest paid, we're making about $300,000 on a $400,000 loan, right? So $700K the consumer's paying. Mm-hmm. As loan officers, we just don't see it. Right. We represent Daddy Wobuck. Somebody up top, is making a crap ton of money on. And now that's assuming somebody holds onto a note for 30 years. Sure. But real estate agents, they get paid once, that's it. So mortgages, in theory, we're making money every month, whether it be the servicer, you hold your own loans or whatever. It's just, it does feel like the loan officer is getting, kind of the smaller piece of the pie, especially when you're like you, Mark, where you're direct to consumer, where you're putting in work, you're creating apps, you're creating platforms, and then you hand it off to somebody, who's there getting 3%. I feel that way about some of our seminars. We put so much energy into marketing, hosting the event, building out the PowerPoint, then to just give it to an agent to make their 3, we make our 1. It seems off balance, but.
Well, I think that has to do with education too, right? Like, I think they don't truly understand how many, like I've had realtors on more occasion than one. And so let me just give my opinion on this
please.
First. My opinion on this is, we've been under scrutiny as lenders and loan officers for a really long time. I mean, I kind of grew up in the time where you could make points on the back and, there's lots of money that was being made and, we came under scrutiny and like you said, they locked down on us and, we can only make so much. We're capped. Heck, I can't even take somebody to lunch for more than $50 without it being seen as, crazy. So we're under a lot of scrutiny. So, the fact that they're getting pressed on a little bit, do I feel bad for the people that have been living in it for so long? Sorta.
Yeah.
Sorta.
Yeah.
But, I also think going back to what I was saying is it goes to education. I don't think they truly understand the team it takes to make a loan go through, right? So they show the home and.
Well, to make a ton of loans go through.
Right.
And I say that because we're all witnessing, I guess we went through a phase from, let's call it 2018 until now to where commissions were rising and competing. And now all of a sudden I'm making 180 basis points and 200 basis points. And it's like, well, what the hell is your company making now at this point?
Right.
It's all in the margin then. Yep. I mean, which is tough to explain to somebody. It's tough to articulate. It's tough to give examples without showing behind the scenes.
Yeah.
That's stuff that we don't necessarily need to be discussing,
right?
But it is there. I mean, there is no, then you hit a wall to where everybody's backtracking. Now we got to drop you to 75. Right. Now we got to drop you to 50. And now in-house deals are this. And we make the necessary modifications, and I don't think all of the loan officers understand that piece.
That's true. That's
Does that make sense?
Yeah, that's true. But I can tell you on more than one occasion, I've had realtors want us to contribute as a lender or loan officer, whatever company I've been at. It's been at every company I've been at. And I don't ever have a problem making a contribution to a buyer, but it's just that's the first thing they think of. Like, let's.
Will you make a contribution to another lender?
I mean,
on a deal you're not on? Like on one of my deals, I need 100 bips. We'll guaranteed rate. Give me 100 bips.
I don't look good in orange, okay? Like, this is not my color. I don't like it. It doesn't go with my hair.
When lenders tell me I don't have a problem contributing, I'm like, I'll take it.
I'll take it.
I could use your concessions.
That's right.
Yeah.
Because for us, the only reason I'm contributing to a deal, the first thing is if we are in the wrong.
Yeah.
I'm not saying we're perfect. There are times where we miss something.
Right.
The other time is, I'd have to say, maybe an incentive that we're offering to everyone, not just one individual.
Right.
But to your point, they don't ever offer that.
No.
And it's like,
always on
guys,
us.
you realize what it takes to make this deal work right now,
Yeah.
right?
Yeah.
Let's talk about that elephant.
Mhm.
I think a good loan officer and a lot of, things that we do in sales training is, the customer lifetime value is really crucial, right? So a good
Yes.
loan officer will help the same family 4 times. And so if you know, hey, I may not get it on this one, but I'm going to get it on their refinance. I'm going to get it on their cash out. I'm going to get it on the second home. I think there's a scarcity mindset. I think a lot of people are just like, it's a one and done, and I need to be scrappy. I need to hold on to all my bips, or realtors. I need to hold on to all my concessions. Somebody that truly works their database, our goal is always 4. We applaud if you close the Martinez family once, but close them 4 times if you want to be a real gangster. I also think, like, you look at 2021 and we did 110,000 VA loans in Texas alone,
Wow.
right? 2022, same thing, like 108,000. And then in 2023, we're sitting at 43,000. So we're like 40% of the VA loans we've done. That's the norm.
Right.
We blew up over the last 2 years because refis were thugged,
Absolutely.
Oh, yeah.
so,
Earls. Yep.
so, there's times where I think we can hold our breath. I always say you can hold your breath a lot longer if you know exactly where the water line is. If I'm only a foot under, I can hold my breath. If I don't know how deep I am, I start to panic. I don't breathe correctly. So I think, loan officers know how to get from, I shouldn't say it like this, but I will, from refi season to refi season, right? This market sucks right now, but I know I got this whole pipeline of people waiting for a call. As soon as rates pull into the 6s, we're going gangbusters, Realtors don't always have that, that arsenal, but that's when they start getting their mortgage licenses. They're like, hey, my friend's making a lot of money refis. I can do it too, And so being diligent and faithful in your purchase business will bring a lot of fruit in our refi, but yeah.
No, I agree.
Well, to your point there, this, in my opinion, realtors joining our side simply for the monetary aspect of it versus, and in my opinion, it almost, God, I don't want to say this, but I'm going to say it. It's almost like a spit in the face.
Okay.
And the reason why I say that is it is saying to me that you can do what I do overnight.
Yeah.
And that kind of irks me a bit because for me, I believe I'm the expert.
Yeah.
I believe Chris is an expert. I believe Stephanie is an expert. We're not paper pushers.
Yeah.
We're not order takers either.
Mm-hmm.
We listen to the consumer, what their goals are, what their problems are. We even ask them about other things. Then we take all of that and we offer it up in way of options and solutions to that consumer.
Yeah.
Whereas I think that piece is being missed and has been missed for quite some time because there's been so many people to our side of the tracks that it was just, next.
Oh, yeah.
Fill out, here's my link, complete the application, submit your documents, and here's your loan.
Yeah.
There was, and what I'm looking for is the high trust conversation, the high trust initial call, that interview, high trust interview that we have that many people, loan officers, are missing these days. And it's what's giving us a bad rap and what's also allowing realtors to think that they can make the transition to our side easy.
Yeah, that's good.
Mhm.
I think it's the introverted, extroverted, kind of deal. You're kind of a unicorn to be so extroverted outside sales.
I'm only extroverted when I need to be.
You're introverted at home?
To be honest, yeah, and
Yeah,
you know
me
what?
too.
I used to be
Me
super.
too. What is
I used
that?
to be super extroverted.
Yeah.
Until I knew better, and then I think as I got wiser,
Yeah.
it was like I hate people.
Yeah. Dude.
I mean, yes.
I
thought
could
that
tell
was
you
just
hated
me.
people. No, I knew you hated
Just you.
When I walked in, I was like,
Awesome. Yeah.
Just
like,
kidding. I'm just kidding. I'm just
I could tell you just felt real safe there. You're like, me too.
I did.
I
like,
too
I
hate
thought-
people.
I thought it was just me.
No.
Yeah,
and,
but-
and I don't hate them. It just,
No.
I just need my time to just
Come on.
get
There's nothing wrong with that.
away.
but
you know?
to your projection, or when I need to be, no problem. We've got plenty of practice being outlandish and doing what we need
Right,
to do
right.
to do the song and dance
Right.
intentionally and sincerely.
Yeah.
But I would much rather be behind a computer building something
Yeah.
that I know is going to change what we're doing.
Yeah.
I would love doing research these days. I love doing planning.
Sure.
Honestly, if I had to do it over again, I would probably leave the mortgage business alone and go straight into digital
The tech.
marketing, tech, all of that stuff. Oh my God, I nerd out these days. Like,
Yeah.
people are like, how'd you learn to do that? Well, I spent hours and hours on YouTube and
Yeah.
then trial and error. But
No, I think that's a fair statement, though, that, agents think, I mean, maybe some of it has to do with the fact that you guys make it look so easy, right? Like they think that they can do it. He can do it. I could do it.
That's the problem.
But it is. And so that's why I was talking earlier, like we need to give them an insight to truly what happens, because there's so much that happens behind the curtains that we don't even let them know, battles we're fighting, to try to.
But then when you do let them know.
It's not
the same
No,
impact.
it's not, because you're only as good as your last loan, right? I could do 10 loans that are amazing and I'm
Correct.
fighting the battle and I could tell them what's going on. Then something happens on one and then I'm just the worst loan.
You got to read the book E-Myth. Have y'all read that?
No.
It's
E-Myth?
good. E-Myth. Yeah,
Okay.
it's super good. Or do y'all do the Headway app, which is like summarizes, do the Headway app for like $90?
Is it like Cliff Notes?
It's Cliff Notes. So I can
love
get through a book in 15 minutes. So you get through 4 books on a run on a treadmill. But E-Myth is good because it talks about 3 components made up of sales. And you got the E-Myth stands for entrepreneur. It's an entrepreneurial myth. Everybody has a friend that's like, oh my gosh, your donuts are so good. You should open a donut shop. And all you ended up doing there is killing your friend who was good at making donuts. You pushed her into starting a business. Now she's stuck in a negative P&L, and she hates the smell of donuts because she has to get up at 3 a.m. every day to preheat the ovens, right? So now the people who do that are entrepreneurs. Entrepreneurs ruin everything. So there's 3 components. You have the entrepreneur, you have the manager, and you have the technician. And when you're a technician and you're good at doing loans, you're good at doing 1003s, I can solve problems, I know my guidelines, I know how to, make a loan work. You got to leave those people alone. Mm-hmm. But in walks Mark Jones, this entrepreneur with a dry erase board. And he's like, I got an idea for this mobile app. And the technician stops what they're working on to hear this guy coming to cast this vision. Because all entrepreneurs want are other people to be entrepreneurs. Like we love casting vision. We say, we have 2 meetings at Rev Mortgage. We have wow meetings, which I'm really good at leading. And we have how meetings, which pull me out of those because I'll turn a how meeting into a wow meeting. And if I have a how person in my wow meeting, you're a wet blanket. Well, boss, how do you think we get out of here? Yeah. I'm casting a vision right
That's
now.
Right. That's right.
And so I think a lot of real estate agents.
So what about 6-minute abs?
Yeah. No. 7. Nobody can get abs in 6 minutes. 7 is the number, right?
Yes.
But a lot of realtors being entrepreneurs are taking good technicians, casting a vision. When at the end of the day, technicians want to go home, get their 9 to 5, their Monday through Friday. Like when I get asked to go speak to realtor groups. I'm like, why do you want me to come in and hype them up? These guys need trainings on how to write contracts, what goes in Section G, how to get a VA addendum clause. Like, teach them the technical things. You need more technicians writing contracts, less entrepreneurs casting visions,
Yeah, 100%.
And I think that's the biggest misunderstanding. I am notorious for going into a room and giving a big idea, and I have to contain myself. I have to stop, and I have to say those people are busy. They're efficient. Let them be efficient. Let them be busy. Real estate agents just tend to be on the entrepreneurial side, bothering technicians, bothering managers. Just leave them alone.
Yeah, no, that's a great point.
Like,
that's a good book.
Perspective.
I like that, and I need to check out that book. But can we flip it? Like, have you seen a lot of loan officers getting their real estate license too?
Hell no.
I've seen that recently, like a lot.
I don't see it as often.
I've seen it a lot, like from whatever reason on my Facebook. Yes, I have Facebook.
I would probably go builder first. I think I go sales rep. If I were going to go in that route, I'd probably go and just snuggle up with a builder who had X amount of deals and go sell some new construction.
Now, I've seen it from an aspect of I'm practicing what I'm preaching and I'm tired of paying commissions or et cetera. So I'm going to become a realtor to write my own contracts. That's kind of how I started with Kristen, my wife. Yeah. And then she started doing production. But yeah, I was not that I was tired of that. It just didn't make sense anymore.
Do you have a real estate
Marcus
license?
Laffey.
No. Oh, I thought
you don't. No, you don't either.
I do not. No.
Yeah. Would you ever consider getting it? No, it's on my radar.
So check it out. Before I got into mortgage, I took all of the real estate classes over at Sabor.
Or Sabor.
I took them at Sabor. My uncle Ernie Guerrero, he was teaching there. He had Alamo Real Estate Brokers back in the day. They did well, and I got to see all of the things that, my uncle and him buying apartment complexes and flipping stuff. So I thought that's what I wanted to do. Took all the classes, and before it was time to take the test, and I had been in banking prior to this, I went, that's not for me. So I switched tracks and did all the mortgage side and went, all right, this is what I feel, all of the culmination of what I've done thus far, credit repair company, banking, investment, business banking, all of those things, financial aspect would help me thrive in this business. So I did. And I have not looked back or considered looking back at that.
If your wife weren't in real estate, do you think you'd be more inclined to look into it? I mean, because technically the perception could be, well, Mark is still getting that piece of the pie, you know, and I bet a lot of people assume that you send all your business to, do you deal with that?
They did, but in the beginning, but I've made it very clear that I'm not the one that gives her business. She actually gives it to me. So from that aspect, even let's say
I'm gonna try to get a deal from
before.
At some point in my life, I got to get a deal from her.
Just to make sure it's massive. Make sure it's massive.
Yeah.
Please, VA.
That'd be awesome. Yeah.
The next, I guess, concept in this is if I were to get my license, I still don't feel comfortable to be on the deal at the same time. Whether it's a VA deal, conventional FHA, I don't want to be in the situation to where I'm the lender and the realtor for any reason.
What about for the concept of building a platform where you get the lead and you want to get a referral from it? You know, you see these big cities out.
That makes sense.
You know, as Veterans United has Veterans United Realty. And what a lot of people don't know is the amount of business that Veterans United drums up. I mean, they have like an $800,000 a month Google ad expense. Like they're gangsters on it. And so they know that in their ads, they're not just creating buyers for lenders, they're creating buyers for realtors. So they're like, okay, we need to get our real estate license. We need to get in this space. So they're taking a 35% rip when they give a deal to a real estate agent that's under their platform. The realtor is not really complaining much, you know, and they actually have really good algorithms to where they're not just going to give you the deal and the realtor has to close it. That realtor has to be a contributing member as well. Correct. They're tracking how many deals we've given you versus how many deals you've given us, and you know, all these things. And I think, man, they'll
even track the deal. Like I've had a couple that Veterans United gave to the agent, then couldn't do the deal, so they send it over. They still take their 35%, and then they track the deal and know exactly who they closed it with.
Exactly.
So
I mean, so in that aspect, that's always intrigued me because a lot of people have always asked, you know, the business. I mean, when you go direct to consumer, oftentimes we're going to find a consumer that doesn't have a realtor. Now, we don't think, I don't speak for y'all, but my first thought is, how can I make money from the real estate agent here? I'm just like, cool, we got a buyer. Let's get him pre-approved. Let's get him in contract. I'll take my 100 bips or whatever it is.
Especially since I've been doing that for so long, it's just second nature, and in hopes that will return the favor times 2 or 3. And if they don't, then they don't get any more deals.
Right. Now, in theory, if you flip it and looking at the history and the theory of, will you pay for my boomtown? We're paying them.
Oh, absolutely.
But lenders don't really get paid. Right. You know, I mean, at the end of the day, we got 2 entities running and racing to the consumer. One entity is a little bit more notorious for putting a bill on these leads than the other.
Sure.
You know, and so when you're a lender that has an opportunity to go direct to consumer and you're doing it pretty well and you've created a deer feed and all these bucks are showing up to your thing, you know, why don't more lenders think about that?
I see where you're coming from. Yeah, I mean, even if perception is skewed, doesn't change the fact that you're still going to get those leads coming in. You're still going to be the spigot that people are going to want to put their mouth under and drink from.
Yeah.
I mean, Zillow's done it. Veterans United done it. Realtor.com's done it. What's the other one? Redfin. I think if you have enough of them to justify, if you're going to lose business over here from somebody's perspective or perception that's off, you can kind of say, so what?
Who's the gangster lender? Like, I wonder who's watching this that's like gangster enough to have a realtor do a DRA with them. Like, can you imagine walking into a lender's office and there's this little desk with a realtor there? And she's like, hi, I pay $3,000 a month to sit here. And the lender's like, I got it like that. You know, I think, and when things shifted in the market and the consumer knew to go to the lender first, you know, I don't know, 5-6 years ago, Zillow put out this data that more consumers aren't reaching out to agents first.
It's happening.
You know, they're getting smart knowing, I need to, you know, get qualified, pre-approved. Why hasn't the journey shifted yet? You know, why aren't more real estate agents approaching lenders?
I think narrow-mindedness. And in addition, I'm going to go as far as to say that most mortgage companies are being led by old dogs that do things the old way.
Right.
So the concept of let's change is let's add technology, not our business model.
Yeah.
Does that make sense?
Yep. Big time.
Because you've got many cases, and I'll say it, I don't have anybody above me other than Jason Mann. There are plenty of layers throughout mortgage companies. Not in mine, not in yours.
Yeah.
but there are plenty that you've got district manager, area manager, this manager.
Mhm.
Okay, do any of them originate? No. Okay, what kind of value are they adding to my business, or what kind of value am I adding to them? Most of the time, it's me as the top producer giving them feedback on some question or conundrum that they have in another area to try and solve it. And your margins are high because of their pay.
Yep.
Yeah.
You know, and I think that that's slowly coming to an end. Most are jumping ship to go to a broker
Yep.
versus the banker model. And I do believe that the banker model can still exist if we get rid of those layers
Yeah.
Yeah.
or have those layers add some real value.
I think
Amen.
that's definitely happening. So.
Yeah.
Amen. I heard y'all, I think you were with Dylan. Y'all were talking about MSAs and DRAs
Mhm.
a couple months ago, and Dylan had shot me. Him and I had gone back and forth in this, but I'm a product of a DRA. Like
Okay.
I built, my business inside of Keller Williams Honolulu. I was competing with Central Pacific Bank, and KW Honolulu was a new market. They were opening up a new center. Had about 100 agents right off the rip, and I think Central Pacific was offering $10,000 a month. And we at Veterans United, we had a lot of roadblocks. They were like, we won't do DRAs, but we'll entertain an MSA.
Okay. Full-blown MSA, not
Full-blown-
test rental.
Yeah, exactly. And so I met with a guy named Kevin Miyama, who was the principal broker at the time. And I said, hey, I'm referring about 7 transactions a month to your agents. What's that worth? So we're not coming to the table with $10,000. I'm coming to the table with referred business. We fly to California, cut a deal. We still had to pay for the actual desk space, right? They take the 4x4 measurement, making sure that you're paying for that, which is, a few $100s or whatever it was compared to the office space. But I worked their bold classes. I learned KW, their vector model, their WI4C2TS. Like I studied the one, all the Kool-Aid Keller Williams wants to serve. I drank it. I studied it. I understood it. And I captured all of their VA market. And through that, I pigeonholed myself. Like Remax didn't want to work with me because I was a Keller Williams boy. But I didn't care. I was doing, $10 to $12 million a month, just crushing it. Had a $600,000 loan amount because I know you'll ask.
Sure.
So I mean, it wasn't like I was doing 100 units a month, but Rylan and I just crushing it, bro. So to your point, I think there's a lot of layers. I think wherever you stand on DRAs, MSAs, it's money being moved around. It's the value. I wasn't somebody that was like, hey, give me your loans because I'm paying your boss to be here. It was give me your loans because I'm the best option there is for you. I'm paying for this for proximity. I'm paying for this so I can hear what y'all are concerned about at the water cooler kind of stuff, kind of infiltrating a little bit of their structure, getting out, replacing myself and putting a different person in there in my place. I think those days are gone. I don't really think that people understand, MSAs, DRAs. I think everybody right now is now just trying to make a buck however they can at whatever capacity. I'm excited about it. I actually,
Same.
I like when
Disruption.
I love disruption, bro. I love. I'm staring at your backdrop. It's throwing me off. Man Mortgage. I was thinking about my Keller Williams Honolulu days. I was approached by Man Mortgage, and my ex-business partner Tony. We're at this function in Hawaii, and this big wig at Man, I forget his name, but Jeff Howard was a big player out there. And he walks up to me at a bar and he goes, hey, you're Tony Diaz's partner at Veterans United, right? You're Chris Cano, got the Cano Mortgage team. I said, yeah. He's like, I'm with Man Mortgage. He offered me like a $400,000 sign-on and like a car.
What?
Man was known like 12 years ago. I always thought it was like, man is just gangster. Like they're just like off the rip.
They kind of are.
Yeah.
I really
Are they still? They're out of Colorado, I think.
They're out of Montana.
Montana.
And
some
the
mountain
owner commutes from Montana to Arizona.
Yeah.
Great family, very small. I mean,
Yeah.
their headquarters, you would think headquarters, big, tall, but it's on a golf course, and it's like 5 buildings that they own, office spaces on the golf course in Montana. It's the coolest thing. Yeah.
Man Mortgage gave Veterans United such a run in Hawaii, man. I just think it's so cool. Like are there a lot of offices in San Antonio by Man, or are you one of the only ones?
I'm the only one.
So you brought Man back into my life, and I saw it. I was like, what is I Think Mortgage? Power? Oh, it's Man. I was like, dude. Yeah. So anyways, tell my Hawaii stories and looking at your Man logo.
So
Let's go.
a previous leader that I had with Academy, Chad Moline out of Arizona, joined Man Mortgage, met him on the golf course and made a deal, all that jazz.
Yeah.
And I was one of the first ones that he had reached out to say, hey, look, we're doing something pretty damn cool. They give a shit if you want to rep their name. Yeah. So you can come up with your own DBA, you have your own P&L. And I'm at the time at Directions going, I'm finding out that this isn't a true P&L. I'm being shackled and I'm not supposed to be. I've got things that I need to build, like Review My Mortgage, that require a little bit more elasticity. So I made the jump. We flew up to Montana, and man, they were a bunch of good. I thought they were Texans. Yeah, to be honest. Yeah.
Have you ever met a guy named Scott Farley?
No.
Ask somebody about Scott.
Okay,
he was
I will.
The big player in Hawaii.
I will.
He was one of the guys. But
so I think is that your name?
Yeah.
Sorry, excuse my ignorance.
Right.
I'm still kind of new and learning.
No worries.
So that's awesome.
Yeah, I think
I
mortgage
like
is a DBA of Man Mortgage. You can call it a division. You can call it a DBA, but that's what it is.
Like it.
And then Review My Mortgage is a separate platform that is consumer direct education, providing loans, exact loan options for a consumer after putting their information in without pulling credit. And then from that, we've spawned LoanBot, which is a customizable tool for loan officers that does the same thing, but it's with your company's product mix.
Oh, wow.
So we're launching that in 2 weeks with Man Mortgage. They're going to be our pilot for the next 3 to 6 months. And then once that's complete, we go live to everywhere else.
Congratulations.
good, bro.
Not yet. There's still hard work and shit got to go into this. But yeah, I mean, it's fun creating something that I believe will not only help us loan officers, especially the new to the business that, I mean, you being branch managers, it's like, hey, what do I do with this loan? Or which one should I recommend? Now I'm able to say, well, what does your loan bot say?
Right.
That's good.
Interesting.
So that they can kind of educate themselves.
How did you pick Guaranteed Rate?
They had a really close affiliation with the USO. And so I was with Guild for a little over 3 years. And I really love Guild. I actually took Guild to Alaska, opened up the branch for them there.
You did?
I did.
Are they still there?
They are.
Come on,
they
look
are.
at you.
So I still really love them, and I have nothing but admiration for them.
Sure.
And you know, they just weren't as close with the military as I wanted to be. I mean, we have a couple of bases there, and you know, I would kind of insert myself in the USO there and just kind of help teach and stuff. But Alaska's a lot behind, you know, things here. So
I've read more legal documents from Guaranteed Rate. I have been threatened to be sued by Guaranteed Rate in my inbox, not to pull you into a weird, but I'm telling you, I love Guaranteed Rate by affiliation. So
was that in the thing you had to say that anytime you mentioned their name?
Disclaimer?
I love Guaranteed Rate.
I know. So I know their in-house, like the head of their in-house counsel, because he's all up in my inbox. I looked him up on LinkedIn, showed him to my in-house counsel, and they're like, don't worry, nothing to really be scared about. But yeah, because I had a couple of shipmates that I served with that were with me at Veterans United. They broke off, went to Guaranteed Rate, all good. We started a new company. I pull them back from Guaranteed Rate, and I was snarky like 5 years ago. I posted like, you know, something that was a dig at Guaranteed Rate for stealing them back. They screenshotted it, you know, and like, hey, cease and desist kind of deal. But about a year and a half ago, Guaranteed Rate went really aggressive with sign-on bonuses, real aggressive. And
Matter of fact, I've got that pulled up here.
Do you? I'm segueing for you,
right?
But I had my boy Trevor Ulrich. You know, he's a pretty big player now. You know, he's made his way through. I think he's with DHI now.
I actually really love Trevor.
Yeah,
I like him.
I lost him to a big old sign-on bonus, and I remember sitting across from him, and you know, it was no hard feelings. But Guaranteed Rate had a lot of capital. But I was wondering, like, you know, how are they going to survive a down market? You know, and these things were written well. If anybody writes sign-on bonuses, like Guaranteed Rate has it locked. You can't just be like, okay, thanks for my. They gonna put a lien on your stuff.
Mm-hmm.
You know, they gonna get it. And so I was just kind of like buyer beware sort of stuff. But I've read so many legal docs of Guaranteed Rate, and you know, kudos, because they took a lot of my good players in a season where capital was really important. Shoot, I almost was like, yo, are they offering this to everybody?
Yeah.
You know,
have you heard, Stephanie, have you heard anything from the branch level on this? And we won't stay on this topic very long. I just wanted to get some insight from somebody that's on the inside.
Yeah.
Because just like every other media, it's bullshit. to a certain extent.
Yeah, I mean, yeah.
Right?
And again, there's not a lot I can say about it. I am still there. And as you said, the legal team is crazy. So, there's not a lot I'm going to say about it. People signed contracts, and if they leave before the contract ends, they have to be collected. And, that's a hard decision sometimes people have to make because they're not originating and they're not making money. Right. They have to make a decision to jump. But, along with that comes, comes whatever you committed to, they're gonna come after it.
Yeah, so, I don't disagree with you on that. If you accept the money, you gotta accept the consequences if you don't do what you say.
If you want to play, you gotta pay.
That's why I don't do the sign-on bonuses.
I know.
I'll give you 200 basis points for the first 2 months. How about that?
Let's come on and I think that's going to go away, like you were talking about earlier. Number one, it locks somebody in to a company they may not know well enough to say, "Hey, I want to be here for 2 years or 3 years or whatever the time is on the contract for." I think that when you take away that incentive portion, you tend to find individuals that want to be with you because of what you represent, what they know about you, and wanting to be affiliated with someone like you.
Sure, absolutely.
So I think that it's important to take it away because you don't want somebody to come at you for the money. Like I definitely don't want someone to come work with me just because I can pay them more money.
I agree 100%. Yeah. And you have plenty of lenders out there in the market that every 2 years they're jumping ship.
Yeah.
They're jumping ship.
And I don't want that guy either.
Yeah. If somebody leaves somebody for more money, they're going to leave you for more money.
That's right. So how you find them is how you lose them, in my opinion.
Did you write that? I'm going to use that.
Go ahead.
T-shirt.
T-shirt time.
How you find them is how you lose them.
Yeah, that's true.
So now that being the case, we'll tuck that one away and put it aside because I don't disagree with you at all.
They're watching.
Hey, are JC's...
It's tough to kick somebody when they're down.
Are JC's legs distracting to y'all? So behind the scenes, you got this guy operating this board, and the TV's blocking. And if I wish the viewers could see, JC's got good calves.
Yeah, he does.
It's like one of those curtains.
He's on his tiptoes. I know he's flexing, but anyways, that's really distracting.
Okay, so we're going to transition to a topic that most of us are on the short end of the stick. Some of us are not, or I don't know lately. Builders, we know we're going to talk about some mortgage stuff. Builders are taking what little business there is currently, and we really have no grounds to provide additional value when the consumer is seeing the value as payment. That's it. Because you can look at, and here's where I'm at. Builders are offering, in many cases, 4%, 5% interest rate. They're all over the place, but they're sub whatever we are at the time. We know how they're doing it, and I've kind of discussed how that's happening behind the scenes. Next time buyer, you get that situation to make that decision. Ask them if you want to take that all off of the actual price of the home and see what they tell you. But what are y'all's thoughts on that? How are you combating that? This is the section of the show where I want to give some advice to those loan officers that are facing this kind of challenge. And we all are facing this challenge.
Yeah, I mean, it's frustrating, right? Because sometimes I feel like, gosh, I could give you so much more guidance and I can provide an overall better experience for you. But, I can't compete with that. And I can't with a good conscience take a client away from a company that's going to beat my rate and then, I could, but I don't want to get them to come and close with me just because, that's just better for them. I feel like just like real estate agents, just like us, I think builders need to come under a little bit more scrutiny and have that review. Like, I don't know how that's not steering. You have
they have better lobbyists than us.
I guess we need to hire them on our end, and real estate need to hire real estate agents to hire them.
Maybe we should give them a sign-on bonus.
We need to write 2-year contract.
Right?
No, I just feel like they need to come on. I just feel like they need to come under some sort of regulation because it's just not.
And I think you're 100% correct. We all feel that, but what are we doing about it? I've been in the business since 2012, and I think it was maybe 2013 when I started saying the same concept.
Yeah, I think you just have to be smarter than them. There's some deals that they can't close just because they don't know any better, and I don't fault them for that. It's just maybe they haven't been in the business long enough or for whatever reason, and you just kind of have to stay ahead of it. I'm not going to win the deals where it's just cookie cutter.
Yeah,
most likely. But
so when you get those scenarios with the consumer, let's say you have the buyer first. Whether given to you by a realtor or you attracted this buyer some way, shape, or form, and they go to the builder side. are you then able to have another conversation with them to confirm with them that, hey, this is the best option for you? I'm not here to just make $1. I want to do the best for you. This may not be the last home that you purchase, but remember me in this situation because these builders are only going to be able to offer this for this situation.
I have, and I've actually won a lot of business back that way, and people have opted to stay with the higher interest rate because we're having this conversation. I still originate loans in Alaska, so 12 o'clock my time, they're 4 hours behind us, and so I'm answering my phone when they need me. And sometimes maybe not so much here in Texas, but definitely in Alaska, they're not getting their calls answered by their loan officer. So I've won deals. They've stayed with me, and I've also won other deals because they went with the builder and they stayed with me because I did the right thing. So I just, there's not a lot that we can do other than to provide the value. I mean, at the end of the day, it doesn't matter what company we work for. I mean, the people are staying with us because they trust us, because there's just, they feel like we're going to provide the better value overall. And so I think that that's what I would emphasize to any loan officer that's competing with the builder is just, try to make sure that you're bringing the most value to the client, because you can't compete with the rate, I don't think.
Hey, things are just going to get worse before they get better.
Now, Chris, I want your take on this because I think you're a little different than what we are. You do focus on builder business,
we get it done.
and being a leader in the forefront to your group. What is it that you guys are doing? Are you throwing your hat in the ring and saying, you know what, let's take this L so that we can take some W's later on?
So you're the preferred lender for the builder? Is that what you're saying?
So we're affiliated with about 13 builders, not the preferred for all of them. Either getting the same incentives as in-house lenders or some capacity, but one, there's that quote where there was a guy who bought 400 horses the day before the Model T came out. That guy kind of got screwed, but he had an option there. You either get on board with the Model T or you just get emotional about your 400 horses. And I think we're in a Model T age where he or she who has the gold makes the rules. Builders, capitalists, they're coming to the table, not just with builders, they're coming with mortgage professionals. All this money tied up in the pot is created something new in our industry, especially as, builder business specifically in San Antonio rose to like 55% this year.
What's due to that?
We got to do something other than this, I'm better than the in-house lender. To a certain degree, there are some really good in-house lenders.
Agreed, yeah.
You're going to have to really convince me to use my own company if somebody's offering me a 5.5% rate when rates are 7.5%, because of their forwards, they're buying rates in bundles. They're doing things that, now, granted, there's first and foremost, can they close? I mean, assuming they can close, all things fair, like one deal just obviously jumps off the page as a better deal. So what we wanted to do was we wanted to say, okay, what is the thing that builders need the most? They need real estate agents and they need buyers. Us being consumer direct, we figured out ways to get consumers and buyers to say, how much is this worth to y'all? If I could provide X amount of buyers that are buying your product or X amount of realtors through a thing called Builder Summit, introducing y'all, would that be worth us being either a second look or being a preferred to some capacity? So we try to bring a realtor and a builder to the same table, have a healthy conversation. And it's not, Rev doesn't always get, our first, sometimes we're second or third look, and we really have to wash dishes to prove ourselves. But it's really not always the execs that make the rules. If you win over enough sales reps, and they're fighting for you, they can make change. I think a lot of lenders are going after the top. A lot of lenders are going after the bottom. You got to go after both the top and the bottom. You got to know who's the one running this and making the decisions, but also who's the one that's, writing contracts on a daily basis. And you got to be able to work both those, angles. And
that's true.
I agree with that. I mean, that's one thing that I've always preached to my loan officers is stop trying to get with the executives. The executives make the decisions from the top level. The sales reps, those are the ones that can make the decision right now. This deal's going south. I'm picking up my phone and I'm calling that person that was just here talking to me, telling me that they can do this type of loan. They're not going to go, oh, hey, regional manager, who should I call? That's just not how it goes, because they want to get paid. They want to get paid quick. They want to help that customer. So let's make a decision now.
I mean, and that's a lot of useful information, I think, working with the builder space. I mean, in Alaska, it's just it's not like here where there's like 10 different builders or more. I don't even know how many yet. I've just never really worked in the builder space as much as I feel like it's been we have to sort of collaborate with them now. So it is new, and I do appreciate that you're even asking the question about, what do we do to help combat that? Because I've just kind of gone on my.
I mean, the second advice that I would give to anyone, which I've used this since day one. I bought SaveMyBuilderLoan.com years ago, and it was like, I don't want to be the first. I don't want to be the first at all. Why? Because I don't need you calling me every single day telling me the stat. What's the status? The same as it was yesterday, I promise. Like, we haven't moved.
Yeah.
I want your turn downs. Give me the ones that you cannot do.
That's good.
And there's plenty of them. Matter of fact, there's more that can't than that can.
Yeah.
I agree.
Let them have that A paper. Let us be the heroes.
Yeah.
Type
I think a lot of people pursuing like JVs and whatnot. I mean, understanding the complexity, like a JV is so complex. And I don't think a lot of builders really understand the complexity that comes with adding a mortgage entity to your company. Like if you take Perry Homes and Perry Homes wants to have Perry Homes Mortgage, and they say, Connor, we really like you. We like what Rev is doing. We want to do a JV. You're no longer Rev Mortgage in that point. You're whoever they say you are. You're Perry Homes Mortgage. There's capital involved with it. There's, you are starting a new underwriting post-closing. You got,
your processes,
everything,
Yeah.
So I'm like, why would anybody? No, I'd rather, to your point, just be a second look. I'd rather be an option. I think there's some times where JVs make sense, but it would have to be a big one. A lot of these builders coming into San Antonio, they're just trying to figure out if they're going to be able to go from one lot to another, meeting those guys or those girls and introducing yourself. But to Mark's point, a lot of our political powers come from what the sales reps say about us versus what we say about us, so doing those deals that, their in-house lender can't do, that doesn't make you their new preferred lender. It earns you a seat to go talk to somebody that can make change, so.
Yeah, and I don't think it's a forever thing. I think people are under the misconception too. And again, my builder business is limited just because I didn't need to do that. But I think people are under the misconception that they picked you, so now you're theirs forever. And it's absolutely not like that, because there's somebody right behind you chomping at the bit to take your space. So you have to constantly continue to earn that business. And I think people just don't do that.
Like they say never and always.
That's right.
Yeah.
That's right.
So the last topic that I want to discuss, and it just came to me a little while ago, is affordable housing. We live in a place where the rest of the United States sees us as uber affordable, right? But the residents of San Antonio and surrounding are still skeptical on that concept of affordable housing being possible for me type situation. What are some solutions? What are some projections? What do you think is going to be the case? I mean, is it just going to be some mom and pop builder comes into town and says, you know what? I don't care about them margins. I'm going to make some skinny margins, but I'm going to make a whole bunch of them, which is tough. Or is the market going to crash to the point to where we've got affordable housing again? I don't think that that's going to happen at all. But what do you guys feel about that concept of affordable housing?
So,
or is it just your shit out of luck? Got to make some more money. That's why in California they've got families upon families living in one property, and I've got a 1003 that has 222.
I mean, do you feel like a lot of people are downsizing more now, like wanting to buy like a land and buy a small house? And
I think that's because that's the only option that is viable. Just because inventory, people are toting about inventory going up, it's still not anywhere near what it needs to be.
Yeah.
Well, why would people want to downsize is the first question.
Good
right?
point.
For mortgage payment primarily, but they're not downsizing in a higher rate market. In theory, downsizing to a 200 when you're in a 350 is going to still feel like a 350.
Maybe not necessarily downsizing, but that's what they want to do is minimalize their lifestyle, so that way they have more, capital to travel and do other things. I think that before we put
those
a lot
are called Gen-Z. And
I didn't want to say that.
You can say it. Come on.
I was trying to spare them, but I think that's happening a lot too.
Our market isn't really allowing for downsizing right now.
No.
And so that's the hard part. So people are feeling the crunch, but again, how do you sell a house with 3.25% rate on it to move into a smaller house with a 7% rate?
Yeah.
You're not feeling the downsize that you're really looking for.
Right.
But a friend of mine who owns restaurants, Russ Reyes, I think JC knows him, but he owns Panchitos, and he always tells me, the best restaurateurs, how do you say that? Restaurateurs?
Restaurantistas.
People that own restaurants.
People own
Can we
restaurants.
just keep it moving?
Yeah, hey, well, Alaska. So he tells me, he says, the best way to be rich is to feed the poor. In the restaurant industry, and the best way to go poor is trying to feed the rich. These people open these big steakhouses and stuff, but you feed people at $9.95 a plate, and you'll do well. And I think about that in any, market. If you figure out a way to cater to the privileged, underserviced, the $200,000 homes, you'll win. But the problem with that is it doesn't fit the model of builders, right? Because the same board that you're paying for on a $200,000 house, you can put on an $800,000 house.
Correct.
And so people and builders are having to build bigger houses, to offset for the cost of, lumber and all the things that we've seen inflation, take a toll on. So I don't think it's going to happen as fast as it needs to happen. You have a lot of people heading south, like Palo Alto area, looking for, those $200,000 price points. But I think the builder that figures out how to cater to that is going to be massively and wildly successful.
I agree.
Especially if we see a rate pullback but I think it needs to happen, whether or not.
San Antonio is also growing so fast. I mean, like I said, over the last 10 years, it looks completely different 10 years ago today.
Yeah.
I'm like, oh my God, I got here. Like, what is all of this? I can't.
Yeah. And to your point, I think we always, as a society, we meet in the middle and then we start growing outwards until there's no land. And one thing that Texas has plenty of is land.
Yeah.
It's just a matter of, are you willing to stretch out that far to commute, et cetera? Because down south, it is cheaper. Not going to be for long once everything migrates.
Right.
But I mean, that is the ticket is compromising location versus what you want in your home.
Yeah.
You can get more in a home on the east side of San Antonio than you can on the north side of San Antonio.
Right.
Are you open to doing that?
I think it was funny, like 20 years ago when you had a friend that lived outside 1604, it was like, no way.
Like, I'm not trying.
They're like, do you want to do dinner tonight? I'm like, no way.
Yeah.
Unless you're giving me a gas card.
Yeah,
That's right.
Yeah, that's true. It's
Now
totally
it's like
different.
everybody lives outside 1604.
Yeah.
That's very true.
I grew up on the east side of San Antonio, right off 35. So everything was 5-10 minutes away. So it's completely different.
Gentrification is gnarly. I'm watching it, and it's exciting to see, the old getting, replaced with the new, and, people are coming into these markets, and, Lavaca and Pearl and Tobin Hill and all these things. And,
But what's odd is they're gentrifying them to a way of unaffordable price point.
Yes, that's true.
And then it sets that standard for everybody else around that. So that's a little scary concept. But go ahead.
What it does to the taxes, you got people, my wife and I own a place. It's a lot over in Tobin Hill area off of North St. Mary's. So it's in that area where all the bars and stuff are. But, I got plans and drawings and stuff like that. But I didn't realize, to get them approved, you had to get approval of the neighbors, and the neighbors are all about not doing it because of taxes and things like that. But, anyways, watching a lot of this, people tell us, there's no way house price tax can continue going up. Us locals won't be able to afford to live here much longer. And I'm like, man, if you think economics cares about demographics, it doesn't. It's happening. It's happening. And there's a lot of good people in San Antonio having to move further and further out. You're seeing it, Helotes and, all these other areas. I'm seeing builders. Somebody posted a builder video of a sales rep in Helotes, and I was like, man, how do you hype up Helotes? But you gotta hype it up.
I grew up there. Yeah,
you grew up in Helotes?
Oh, nice.
Oh man, I was like, come on, skip rocks, or whatever the case is. I was like, man, I don't know how you're
plenty of bonfires, trucks out in the woods.
Let's go.
I'm telling you, we got chased by helicopter cops. They had to bring in the choppers.
Yeah. I know the house I grew up in. My aunt sold it for $15,000. It's over on Government Hill, and I'm like, oh God, why?
Wow.
Why did you do that?
Wow.
$15,000. Yeah.
So one last question. This wasn't even on the agenda, but I think this is the right group to ask this. If rates, we've seen a small drop in rates. Yeah. And I'm not going to over publicize it because it shouldn't be.
Yeah.
They dropped in rates, tiny bit. If we see rates drop substantially, let's say right now we're sitting at 6 7/8, around that 7%, 7.25%. Okay,
yeah.
Right,
there you go. I was like, dang, bro, don't take my deals.
If we were to see them drop to a 5.5%, 6% on the money rate, what do you think that would do to our values? What do you think that would do to the purchasing power that the current buyer that's sitting on the fence believes they would have, but probably won't?
That's a good question. And I think it's a question that I think a lot of loan officers aren't preparing to answer. And I think our loan officers are going to be very reactive versus being proactive. Because if the Fed's already putting out, they're seeing a 200 basis point drop by, the end of Q1 of next year, that is realistic. Going from a 7.5% to a 5.5% rate is around the corner. And so to answer it just right off the rip, I think a lot of buyers are going to come out. People have been waiting. I think prices are going to go back up. I think it's going to be a seller's market again. But the question is, how do you get ahead of it? And I'm kind of anti buy downs right now.
Same.
Like I'm like, yo, if we're getting a $10,000 credit from a seller, why buy down a rate that may be available to us through a refinance in 6 months when I could pay off this 18% credit card right now that's been trailing you for the last 12 years?
Clear off that
debt, right? But how do you explain to a buyer, hey, instead of a lower interest rate, I'm going to make more sense out of your loan here. I'm going to take this credit, instead of doing a 2-1 buy down for you, I'm going to pay off this 18%, Capital One card, because, the market, is already heading in the direction of the rate that I think you want. Now, is it guaranteed? Absolutely not. But I do know that the guarantee today would be getting rid of this debt that's actually consuming you at a higher level. I think it's a waste of money right now. I think buying down your rate whenever there's as strong as projections as there are for a rate drop, I just don't think it's wise.
Great point. Agree. I believe that is what a loan officer, mortgage-wise, should be explaining to their borrowers.
Yeah.
Since I'm producing, I do.
Yeah.
But I also have the patience and the confidence to know that what I'm telling them is the truth. I can articulate it. I can utilize any kind of calculators, what have you, to show them visuals.
Yeah.
But I believe that the masses of loan officers don't have the confidence, don't have the understanding of the tools and how they work to be able to show what the difference is between the two options.
I mean, I think we lived there before, though. Like there's this misconception that this 5% rate is like, oh, so good. We're going to get back to the twos. Twos were the unicorn. Twos were the things that we had never seen before. 4, 5, 6. I mean, that's sort of like where it's always been, at least as far as I've been in the business. Like, so I don't know why.
But I think to Chris's point is we're constantly selling the payment, which that's normal, without looking at the rest of their debt.
Yeah.
Like, we are mortgage advisors.
Right.
We're not financial planners because we're not in the market, but damn it, with all the things that we have available that we're looking at right now, I can see that you're pushing me for a $200 less a month payment.
And here it is when we pay off this debt.
And it's right here.
That's right.
It's literally right here. And all that food and bullshit that you bought, it's still there, and you're paying interest on it.
That's right.
And in a 5-minute conversation about how interest works could, last a lifetime. If somebody explained, look, who cares what your interest rate is on your mortgage? You're writing off against your adjusted gross income anyways. But this interest on this car, however, doing you no good. This interest on your credit card, however, doing you no good.
Speaking to my heart right now.
Yeah, interest is the eighth wonder of the world. The person that receives it, makes the rules. And so our goal is to keep interest out of the bank's hands and take ownership of it. And, but it's not a popular conversation because Bob's neighbor just got a 5.5% rate. Damn it, they want a 5.5% rate. It's
buyers are chasing the rate.
Amen. And, what we need to be chasing is, obviously, if you're in a seat where you're in a position to buy real estate, you're trying to build your, passive income, your portfolio, your financial wealth overall. Why not stick around and get an extra nugget from somebody, whether it be through one of you guys or a lender, who actually knows what they're talking about, not just having somebody fill out an online application and then just clicking submit to underwriting, right? So through that, now, but being empathetic enough to know, hey, they want the lower rate. Cool. And I don't know them, and I don't know what, they've been walking through. Yeah. Some people just need it today, and that's fine. And so when people are like, well, what if the market doesn't go down? If I still buy in a 7%, 7.5% market today, and I'm like, well, if it doesn't go down, then the implication is it's going to go up, in which case you'll be happy you bought in the lowest market at the time That's possible, So I'm pro buy a house today. I'm pro hurry up and buy a house today. House prices are about to go up. I'd rather take a $20,000 price reduction with a $12,000 seller concession because rates are high and sellers know that and they're giving us to this. if you look at the price difference between a house today and a house exactly a year ago, you're probably paying $400 more a month today.
Yeah.
But you're not getting $12,000 in seller concessions last year. You're not getting a $20,000 price reduction last year. So when you look at the amortization, you're usually in the good today.
Mhm.
Like, I'd rather have a higher interest rate market getting me a discounted house, knowing I could refinance, when we have a pullback.
With the understanding that if I get a little extra money and I'm able to part with it, I'm going to put that towards my principal.
Yeah.
And it's doing me just as
Exactly.
much good.
That's right.
Exactly.
Yeah.
That's
I like
tough, man. Because that took a lot of us, 50 loans to really understand. And so I'm not like, home buyer after 15 minutes in a pre-approval appointment is going to get this. So I don't throw shit.
I agree.
I mean, I probably originated 30 loans before I was like, oh, that's how that works. It takes us a long time. So the best thing to do is build trust with who you're representing. I'm almost like telling my consumers, just give me your username and passwords.
Yeah.
And I'm just going to do this for you.
Yeah.
Like I promise you, I know what I'm talking
That's
about.
right.
I promise you, I'm not going to rip you off.
Right.
But until you get it, you just got to trust me here.
Yeah.
That's right.
That's tough,
I
but
agree.
No, I do agree.
Yeah.
So that being the case, like we got nothing else to talk
Well, I
about
actually
other than
have
the
a question.
best tacos.
Wait.
I'm just kidding.
I mean, can we still talk about that
Go
though?
ahead.
Taco about that.
Oh, I like that.
So I have a question. So I've never been in front of I know of Veterans United but I've never been in front of somebody that was actually with them. As a veteran,
Oh shit.
as a veteran,
I
and
know.
I say this with
We almost
all
got away with-
due respect.
Yeah.
Yeah, I mean, we brought up mine, so I got to bring up. I showed you mine, so you got to show me yours.
Go ahead.
So, with all due respect, were you offended as a veteran working there at any point?
Absolutely not.
Okay.
So the fact of the matter is, we like to poke and jab and have fun. But when you look up the data, and you can actually Google this, the average net worth of a homeowner being $250,000 versus that of a renter being $6,300. There's a big margin between homeowners and renters. Do I care that Veterans United is maybe going to be charging $5,000 more than the average lender? I do, because there's a cheaper way to go about it. But what I never want to do is scare a consumer away from buying it all, because the true nature of this is become a homeowner. Like, that's what I preach. Now, become a homeowner at the lowest price possible, at the best experience possible. Veterans United has helped thousands of people become homeowners.
Yeah.
Thousands. The way they market, they're waking up a database that needs to get woken up.
Sure.
Do I wish they did it cheaper? Yes.
And that's not the biggest thing, right? It's not just about price. Like and again, I'm saying this as respectful as I possibly can, just because I've had some experiences with them.
What would it sound like if you were disrespectful?
We don't
Yeah,
wanna know.
yeah.
We'd have to take it offline. I just had a lot of people work with them, and because the name is misdirecting or there's a misconception behind the name that they are the person you're supposed to go to.
Yeah.
People assume that they're supposed to do that, and it's not as much as pricing, because pricing comes in all shapes and forms, and
Sure.
there's money to be made somewhere, but that they go to them and these are supposed to be the VA experts, and sometimes it's not the case, right?
Sure.
And not saying that that's about you, but
no.
other people that work there.
Trust me, I don't take any offense.
Yeah.
Like, the chip on my shoulder is probably bigger than yours, because I felt like I was, under the regime for a while.
Yeah.
I would ask you how you felt about Navy Federal in that aspect. They have the name Navy in it. Imagine being a
that's
sailor
true, yeah.
who is trying to finance their first car, thinking Navy Federal is the bank that has my back.
Yeah.
And I'm like, oh, they're just a bank, again, charging high fees.
Yep.
USAA,
Yep.
Randolph Brooks Federal Credit Union.
Yeah.
A name it can be deceiving,
Yeah.
or a name can be brilliant marketing, and so
and it's definitely brilliant. I will never take that away from you.
it is
It's
brilliant.
Just,
It is brilliant.
Definitely.
The reason I left is because I realized, to have the name Veterans United, we should be outside the box VA experts. We should be
Yeah.
doing things that other people can't do. But the fact of the matter is, and how I felt about them at the time, was they were very cookie cutter, 30-year fixed VA. Like, I was losing deals that were just walking across the street going to Navy Federal. And I'm like, if we're going to be called Veterans United, we need to do things other people can't do. But when people are, anyways, get off my high
Maybe
horse.
we could take that offline.
Yeah,
and just
yeah,
you and
but,
I just have a conversation.
No. I will tell you though, to give them kudos, and this took me a long time because I wasn't always, as happy-go-lucky as I am now about it, but they have helped thousands of people.
Yeah.
They could have done it smoother. They could have a better experience, better loan officers, but I would imagine that, any person who closed with them 10 years ago is so grateful they bought a house, equity in the home. And even me, whenever I was in the Navy in 2008, I bought my first house as an E5. I got my eyes gouged out by Flagstar. They were a broker.
Wow, yeah.
But would I change it? No. I got $400,000 or $500,000 of equity in the home, and so do I care about the $6,300 they overcharged me? Not anymore.
Yeah.
That's a good point. There is we always look at the right now, and we'd have zero inclination of foresight. Yes.
Yeah.
And I think Veterans United still doesn't offer that TextBet loan, right?
No, dude, we used to argue about that.
Big time.
Big time argue about that. That was the thing. I remember
Look
the
who
BLB.
does offer it. I think mortgage.
It was like my only talking point.
Everything
else.
We did not want to. But let me ask y'all this question to throw a loop real quick. What is y'all's opinion on real estate being the best vehicle for a veteran to financial literacy or financial wealth? Or
I think it is the only way, not just for a veteran, but anyone.
Okay.
And then the key to this is holding the real estate.
Okay.
I think
are you saying above stocks, above like any other vehicle?
It is the one that has stood the testament of time.
Okay.
Truly, you can go back and actually run a test to see if you put X amount of dollars into the market, into, let's call it a conservative, whatever account, brokerage, what have you, versus the same amount in a real estate. And matter of fact, you probably could run it anywhere in the United States, not just Texas, and you would still come out ahead with real estate.
Okay.
In addition to the tax benefits that you have, the memories that you make. You don't make any real memories with money in the market.
Yeah.
Right?
Yeah.
So it's a multifaceted driver of wealth. In my opinion, I make and have made great money for a long time.
Yeah.
But I would not have as much of it as we still do had we not put it in real estate.
That's good.
To be honest.
I think about that, and I wonder, because real estate is one of the only vehicles that makes you invest monthly.
Correct.
You don't have a choice.
Yeah.
And so to your point, if you were to put it side by side and I made you invest in any other entity on the first of every month for 30 years, which one would get you further? And I think, as a veteran, and when your focus is on serving our country and your focus is on, making sure that you're protecting our borders, going home, being a good father, good wife, we oftentimes need a little bit of that discipline, so I think as a young 28-year-old buying my first house as an E5, I needed that discipline to be like, okay, I bought a house. I have to put a check in the mailbox on the first of every month. It almost forced me into success to a capacity. Right. So to me, that's why it has the biggest advantage. I don't always know if, because of writing off the interest or because depreciation or because I just know it's because I don't have a choice to make these payments.
Yeah.
Got to.
Yeah.
Absolutely.
Thing.
I have to agree with that wholeheartedly.
Yeah.
And I think what I'm going to do is see if ChatGPT can articulate that for me, and I'll put it in the comments of this on the YouTube channel.
Let's go.
I think that's pretty good. So I think we've had a great discussion about many different topics. This is truly a lender life episode. We've covered every corner of the market when it comes to that, perspective wise, opinion wise, and very factual.
Yeah.
Is there anything else that you guys want to leave our listeners, guests with?
I mean, I would just say, consumers sometimes feel like they're subservient to us and not me, because I don't make them feel that way. But sometimes they do feel like they can't ask questions. And I just want to put out there that, if you are in search of a loan officer, make sure you interview them. It's a relationship. Make sure this is somebody that you can stay with for 15 days in my case, or 35, 45
Let's
days.
go. Small flags.
I'm just kidding.
Get it.
No, I'm just, seriously though, just make sure it's somebody that you can work with well and that you trust. I think that's so important. And interview us, ask us questions. I always encourage people to shop and make sure that they're at home with me. So I can
rate
put them
is
in
pretty
their home.
important, but it's not the most important.
No, it's not. Don't chase the rate. That's the last thing.
Chris?
Yeah, I would say work with Guaranteed Rate.
Oh, thank you, Chris. Sponsored by Chris
I
Conlon.
got you. Yeah, for sure. Yeah, give her a chance.
Stephanie Peavy.
Yeah, give Stephanie a chance. That'd be my closing remarks.
Aw.
Very good.
Thank
Well,
you.
I want to thank you both for joining me, giving me all the goods, and transparently. I truly respect both of you.
Thank you.
Continue to respect both of you.
Thanks, bro.
And hopefully we can, maybe in another 2 months, we'll bring this back and talk about the market and how right we were about it.
Yeah, let's go.
Truly an honor to be here. Thank you so much.
Yeah,
Very
thanks,
welcome.
bro. Good
Of
to be
course. course. Well, those of you out there listening, I hope you gained something from this. If you didn't, maybe share it with a friend. Maybe they'll share with you what they gained and kind of explain some of the things that we talked about today. But in the spirit of continuing to grow this show, the message that we're trying to convey, it's just education. We want transparent education because when I was coming up through the ranks, everything was hidden. The person above me did this. And the person above him did that. So I think this new generation of loan officers, mortgage professionals are pulling back the curtains, continuing, and Pandora doesn't go back in the box. So keeping that in the forefront, I want to thank you guys for tuning in. Again, last thanks again to the guests.
Thank you.
And we will catch you on the next one.
See ya.